Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 29th of August. Starting with the FTSE 100, which is rather becalmed at the moment, but at the higher levels. Initial resistance there, that red resistance line projection from back in May, 84.30. After that, looking for the top of the rising trend channel from back in September last year, 86.40. On the downside, hoping that we won't get anything lower than the 50-day moving average currently at 82.20, and obviously, ideally we stay on the right side of 8300, which we've managed to do for the last few sessions. Next up is the DAX, and here hoping to end the month rather better than it started, with a push towards record highs, 18,900 or so. We've got the top of that rising trend channel from back in October, heading for 20,000. That's what we're looking for by the end of next month, especially while we remain above that broken May resistance line at 18,600. Hoping that any rug pull won't go any lower than the rising 50-day line, 18,200. Moving on to the Dow, which slipped up a bit after hitting temporary new record highs. We've managed to bounce off the old July resistance line, which is now support at 41,000. Above that, still looking for this market to head up to the top of that rising trend channel from this time last year, as high as 42,600 by the end of next month. Obviously, the 50-day line there, once again, hopefully going to be support if we have a rug pull. That's just shy of 40,000. RSI in the low 60s, which is in a good place, so not overbought at all, gives some scope for further rises. Moving on to Bitcoin, which had a rug pull and managed to fall below the 60,000 level. Also below that, where it depends on exactly where that support line is, but could be near where we are now, so around the 58,000 or 59,000 level. If we can hold above this area, then we still have the chance of retesting recent resistance at 65,000, but still hoping for 69,000 and that March resistance line to be the target over the next month or so. RSI is on the wrong side of neutral 50, so still we have the chance of heading down to the 52,000 area and that February support line projection. At the moment, it's a battle between the rising 50 and 200-day lines and an ongoing RSI below the neutral 50 level. Moving on to gold, where the picture has been bright and remains bright above 2,500. The old resistance there around 25.20, and above that we're looking for the top of the rising trend channel from back in December, as high as 26.35 now by the end of next month. On the downside, 24.80 hopefully will cover any losses. That was the recent support area for this market, although we do have bearish divergence there in the RSI window with higher highs over the last week, with the RSI topping out, so something to be wary of. Moving on to the stocks, and starting off with Artemis, so where there has been the setup that we like here, Bear Trap Island reversal, going from gapping down in July and then gapping up this month, and support coming in well above now a rising 50-day moving average. So looking for the shares to hit 1.1 pence on the top of that falling trend channel from this time last year, maybe by the end of next month. The key here, obviously, staying above that 50-day line at 0.6 pence. ADVFN has been rising, I think, on no news. We've had a V-shaped bull flag breakout through 25 pence. We hit our initial target there, 24 3/4, and the longer we stay above that, the greater the chance of a move to the upper parallel of that resistance line from last July, heading to 36 pence perhaps by the end of next month. What we don't want to see is any price action below recent support around 21.5 pence for the shares, obviously, but overbought at the moment after doubling over the recent past. On to a stock which has the unlikely scenario of being one of the best setups around, because it is another Bear Trap Island reversal, so gapping down to new lows and then gapping up this month. We've also got a consolidation above a now rising 50-day moving average, a nice hammer candle yesterday, and in fact it's a double Bear Trap Island reversal because we gapped down also at the beginning of this month, so this should be one of the best setups ever, with a double plus on the Bear Trap Island reversal front. Top of the rising trend channel base there from last November at 30 pence. Hoping for that by the end of next month, although we do have the 200-day line as resistance at 16.5 pence. We haven't been above that since basically this time last year. So potentially a turnaround situation while we remain above that 50-day line at 13 pence. On to CleanTech Lithium, which has given the market what it was looking for in terms of the dual list with the ASX, and seeing the shares currently bumping along the bottom of that rising trend channel base from January, and doing that quite well at the moment. So the level there around 15 pence above that. Obviously, we've got the 200-day line at 18 pence as the initial resistance, but actually hoping for up to 27 pence by the end of next month while we remain above 15 pence. So reasonable risk reward there. If you're cautious, you wait for the RSI to go back above the neutral 50 level versus 45 at the moment. Moving on to a stock which doesn't get much airtime either here or anywhere else, Essensys, but we are seeing the shares actually head towards the target that we were looking for previously, 46 pence, and that's valid while we hold above the floor of the latest gap at 30 pence. Ideally, we stay on the right side of the 50-day line, now rising at 31.5 pence, and if you look closely, this is also a bear trap island reversal, so gapping down at the beginning of the month and gapping up today. So that, along with the way that the 200-day line is also rising, makes this look rather compelling at the moment. Faron is next, and here it's the stock which we looked at before on previous rallies. What's interesting here is that we've had a rebound above the 200-day line at 193 pence. That's normally a show of strength. In terms of the market being too strong to test that particular feature, but also had a gap higher at the beginning of the week. So looking for not only the previous target there around 219 pence, but up to 292 pence at the purple line there, which hopefully will be delivered by the end of next month or even sooner. The key here is that there's no end of day close back below 193 pence. Decent update today from Gem Diamonds, which some of the more intellectual Twitterati have picked up on today. We already had the shares set up as a potential move to, or having a potential move to, up to 17.25 pence, which after today's or yesterday's gap higher seems quite likely. The other point to note is both the 50 and 200-day lines are rising, which means we can actually, or we are justified in looking for a fresh target there on the upside, and that would probably be the line I'm just drawing at the moment, the upper parallel of that October line heading for 23 pence, and maybe we get that if we behave ourselves by the end of next month. Moving along to Helium 1, where a bit of a battle here in terms of finding support, or trying to find support here at the floor of that rising trend channel. Obviously the rug was pulled with the placing. What will be interesting here is we can hold above the 50-day line at 1.25 pence in the floor of that channel. What normally happens, obviously, is that a stock will retest the placing level, which in this case is close to 1 pence. So a bit of a battle there. Ideally, obviously, we stay above 1.25 and fill the gap up to 1.75 pence. But it might be the case that those some people might want to wait for a dip towards 1 pence and try and get the stock there, rather than hoping that we'll go straight through the 200-day moving average, 1.45 pence, and fill that gap. On to KP2, otherwise known as Core Potash, and here, beautiful looking chart, very steep rising trend channel there. We're in a triangle, which is made up of that May resistance line there at 2.1 pence. Want to see an end of day close above that to open up the prospect of a move as high as 3.6 pence by the end of next month. Upside valid while we hold above that 50-day line at 1.75 pence, and also the floor of that channel. So very encouraging looking chart there at Core Potash. Kazera is next. Nice update to date, and here we've obviously blown out our first target there at 0.81. Second target was at around 1.11 pence, and we just missed that. Hopefully we'll get through that over the next few days, and maybe it's even time to try and look for a fresh target on this situation, which would probably be the line that I'm drawing at the moment, up to 1.5 pence by the end of next month as a best case scenario target. All the while we want to stay above 0.95 pence, which was the old resistance from last July. That might be asking a bit too much, but the way that the 50 and 200-day lines are both rising at the moment, we're heading for a golden cross over the next week or so, and the run-up to a golden cross tends to be the strongest part of the cycle, something we've already seen in the wake of the gap higher that we had from the 15th of August. On to Mosman, which has its many fans, and here still trying to regroup after that test of the 0.04 pence area, looking for initial resistance there at the 50-day line, 0.055, but the big line to break is 0.062. That's the line there from last month. If we can get through that, then maybe we can get up to 0.09 pence over the next 4 to 6 weeks. But the key here, obviously, holding that 0.04 area. On to Neo Energy, and here, after hitting our third target there at 1.7 pence, we've come back, and we're trying to find support basically at the second target there, 1.2 pence. The low today so far, 1.2 pence, so the stock is obviously listening to the charting. The other point to note at the moment is that the 50 and 200-day lines are rising, and rising into a golden cross, hopefully over the next couple of weeks, and obviously that should support the share price. What we don't want to see really is an end-of-day close back below 1.2 pence, or if you're maybe more generous, the initial August peak, 1.16 pence. Finishing off with Shuka again, and here it's all about trying to have an end-of-day close back above the floor of the gap there at 6 pence. If we can do that, then we're looking for the shares to fill the gap there up to 8 pence over the next couple of weeks. That's it for me today. More updates tomorrow.